Congratulations, it's finally time to get that car loan. But before you do it, there are some very basic steps that we have to go through to ensure not only that you're going to get approved for that car loan, but you're also going to get it at the best rate. I don't want you to be the one that is going out there getting an auto loan through a dealership, paying a very high rate because you don't know any better. So in this video, we're going to be talking about the basics and the tips and tricks to getting the best auto loan rate that you can based on these. Now, number one, checking your credit report, knowing where your credit score is. Now, lenders base their rates on the credit score. So the better credit score that you have not only increases the chances of you getting approved, but it is also going to yield you a much better rate. Now, we have a couple bureaus out there. We have Equifax, we have Experian, and we have TransUnion. You can go out to annualcreditreport.com. You want to pull your full credit so you can see. Now, this, of course, is not going to yield you a score. However, you can go through the credit report and make sure that there is nothing inaccurate on there and make sure that everything is good. There are no errors. There's nothing, that's reporting late that shouldn't be. There are things that shouldn't be on the credit report that are on there, or vice versa, making sure, again, that you have the best overall score. Now, to get the score, you do have to pay an additional charge, which I don't recommend, but as of right now, there's a lot of bank accounts, there's a lot of credit cards, a lot of different places that you can get your score for absolutely free. And if you have no score at this point, most of them will assign you just a baseline credit score, which means that could also drive up your rate if you don't have a cosigner that has better credit that you can kind of write off of. But this will tell you a lot of things when you get your score. And again, in addition to rate, some do have different Advantage models. Some of them do have different FICO scores. Some of them have different scoring models based on previous auto loan that you've had. If you've never had an auto loan, it could be, again, a lower score with a higher rate. You have to shop around for this, which is number two, shopping around on more than one lender. So you want to look at your national banks, you want to look at your local banks, but also getting into credit unions, also looking online. There's a lot of lenders that will do auto loans online, and also looking for some of the retailers that do carry cars and they do the financing themselves. So when you look at Carvana, you can buy a car at Carvana and they will actually do the financing there. You can also look at the dealership financing. Now, dealerships do have relationships with lenders, meaning that if a dealership does an auto loan through a lender, most of the time the dealership is going to get a kickback or get a rebate from that lender for sending them the auto loan, which could drive some dealerships to push you into a higher loan rate through a different lender because the lender is actually going to give that dealership a reward. Again, that's kind of how the game works. But making sure that you are setting yourself up not only to have a good term, but to also have the best rate that you have makes it really available. Now, a lot of dealerships, when you go in and do an application, they will run you through a bunch of different retailers, give you the best rate, tell them you want to see it on paper. You want to see it, you want to see the agreement, you want to see the rates, you want to do your own comparison, because a lot of times, again, a lot of dealerships will come back and say this was the best rate, when it might not have 100% been the best rate, but that is the one they told you. Step number three, getting pre-approved for this loan. This will tell you not only where your credit score is if they do a credit inquiry, but based on your score. So if you go in and you say to me at a financial institution, I know my score is a 680, what am I going to be approved for? I can pull up some sheets, look at what a 680 is depending on the year that you're having a vehicle or what you're looking for. I can kind of estimate where your rate is going to be based on if that is where your credit score comes back. Now, you can also do a pre-approval. So pre-approval is a little different than a pre-qualification. Pre-qualification is just kind of an estimation of where you're at and where you're going to be at rate-wise. We can calculate, amount you can borrow based on payment, where you're comfortable, running a bunch of numbers. But getting an auto loan pre-approval means that I have your credit in hand, meaning there is no question on that exactly what it is going to look like. Now, with your credit in hand, not only do I have the score, but I also have your full credit report. And very easily with your income, I can calculate your debt to income ratios, the probability that you're going to get approved just based on the number factor of it without even having the vehicle at this point. We can run some numbers and see exactly what it's going to look like and where, if the pre-approval is going to kind of stick or the pre-qualification is going to be and going to work well. Because what I hate to see is you come in, you think you have a 680 score. We do a hard inquiry from Experian. All of a sudden, it's at a 590 based on the auto enhanced score. And now your rate goes, what you thought was going to be 7%, up to 15%. And now it is out of your budget, or you're going to have to get a much lower vehicle. And speaking of budgets, that is number 4, using your loan offers, setting your budget. This is one of the big things that people do not do. A lot of people will go out, they'll find the car that they love. It's got all the bells and whistles. It's got a high price tag. Then when you look at the monthly payment based on your rate, it is way outside of the affordable range, which means they are using far too much of their income to actually purchase this vehicle. First time buyer, first time car shouldn't be a $50,000 or $70,000 car. It's just unrealistic, especially as a new driver. But still, I see a lot of different individuals that come in with the high expectation that, hey, I make $2,000 a month. I can afford a $1,200 car payment. You're not going to get approved. I don't know any dealers that would do the same. It can almost fall into the thought of predatory lending. If you're lending someone that essentially can't make the car payment or is not going to be able to have or struggle with the payment. Now, I've seen everything ranging from a 1.74, which is a super low A plus, member that has a really good rate. And I've seen them where we have, D and E credit, that guaranteed financing. Now be careful when they say guaranteed financing, because we've seen them at 29.99% on a guaranteed financing, meaning that 30% of your payment is pretty much just going to interest, which is insane to think when you think of the auto loan terms. Now, in addition, this is where you can kind of play with the terms in here. So majority of lenders will go up to 84 months. So you can do 60 months, 72 months, you can do 84 months, you can do kind of anywhere in between. This, of course, is going to have a huge factor when it comes to your payment and exactly what you're going to stick to budget-wise. Now, again, a lot of people come in that are looking for new cars. We do the pre-approval. They don't know where their budget is, kind of what determines their budget. They don't come in with a number. They don't come in with a thought on how much they can spend or how much they can budget with this just based on the auto loan itself. So it makes a big difference if you're going to get a loan and you come in and you say, I can afford a payment no higher than $400. Let's go ahead and play with the term a little bit. Let's play with the amount that you want to borrow a little bit to get you in that budget if you know exactly where you are, which again, budget-wise, unfortunately, majority of people do not know exactly where they stand, don't know exactly how much they can budget, and don't know exactly how comfortable they are with the payment. Number 5, we finally get into getting a car. This is right. Now, getting a car, there are a ton of models. There's a ton of makes, ton of bells and whistles. A lot of them are very basic. You have to break down exactly what you're looking for. Are you looking for a car? Are you looking for an SUV? Are you looking for a truck? Really knowing what you're looking for can kind of start building the baseline of what types of vehicles are out there and what price range. There's certain times where trucks are incredibly expensive. Majority of people have went to small or mid-size SUVs. Bigger SUVs, of course, come with a much bigger price tag, but also with that, knowing exactly what you need it for. Now, I am a big proponent of, not really overbuying on a car, since we know it is the biggest depreciating asset that you will have probably in your life. For the most part, if you buy a brand new car and it is fully priced, you drive it off the lot, they say 15 to 18% of the value is gone just like that when you drive it off the lot. Meaning that if you're buying a car that's 2 or 3 years old, even looking at, 10, 20, 30,000 miles on that vehicle, you can save that initial depreciation and get a car that has a lot more value with a lot less cost, which I absolutely love. Now, there's also a lot of cars that, you have the hybrids, you have the EVs, you have the gas, you have the diesel. Again, kind of going through personally and narrowing it down with exactly what you want. And then also, depending on where you live, keep that in mind as well. We have a lot of people that drive more of a sports car. We live in Michigan. We get a lot of snow, a lot of ice. They don't perform incredibly well on the roads. If you're looking to move anything, if you're looking to store anything, again, this is something that you have to keep in mind when you're looking to buy that car. Now, in addition, the final one, so once we have the vehicle, we have the make, the model, the year, we know exactly what you're looking to buy. Are you buying it from an individual as a private purchase, or are you looking to buy it as a dealership? Dealership, of course, much easier, much clear cut because they give us a purchase order, cut them a check, and we are done at that point. The transaction is complete. They give you the keys. With a private purchase, could be a little bit trickier depending if your titles are held electronically, if they have paper titles, if there is a lien on it. There's a few other caveats if you are going that route. But once you have that vehicle finalized, we pull the NADA, make sure we know the value of the vehicle, and this really protects you in two different ways. Number one, you're not overpaying for the vehicle. So if I have a vehicle that comes in and it says the value of it is $24,000, then I look at the invoice and the dealership's charging you $35,000 for it. Not really going to be worth it. They are way overcharging. The value of the vehicle is not worth what they are selling it for. It is a red flag, guys, that you should completely turn away from that deal because there has to be a reason why they are so grossly overcharging what the vehicle is worth. Now, again, a majority of dealerships know this and they know that no one's going to get approved if the price is that high. And of course, the dealers work on margin where if they buy a car for X amount of dollars, they want to make a certain percentage of the sale. That way the dealership stays in business and they stay profitable. But also with that, again, once we know the vehicle, once we know the value, we can put it in line with the pre-approval that we had, make everything work on the term, get the payment that you're comfortable with, making sure, again, that you budgeted for that payment so we know exactly where it's at. And then you were all set. You take your check to the dealership, you pick up your car, and congratulations, you have your brand new car and you are all set to go. So I hope it helps a little bit. Again, a question I get all the time is how do I get a car loan? For a lot of people, again, it could be the first car that they're getting, but for a lot, it could be many, many years, including myself. My car now is 7 years old. I usually drive them 10 to 12 years, which is regular for me because I pay them off, and usually a year or two after buying used vehicles means that I have years, multiple years, 7 to 9 years of no car payments, which is incredibly helpful when it comes to budgeting and also when it comes to everything else finance-wise, giving me the ability to retain a majority of my paycheck because I'm not having it go to interest on the car loan. And guys, I'll leave you with one more point. Shop around. When you look at your rate, it is an ultra competitive environment. When you're looking at banks, when you're looking at credit unions, when you're looking at different lending institutions, see who is going to have the best rate. If you know your credit score, you can really shop around and know exactly what rate you're going to have. Take your time. It is not something that you want to hop in. Say you want to get a car and you're going to go get it today because you decided today that you wanted to go get a car. Take a couple days, make sure you have everything in line, make sure the credit score is cleaned up. Just like anything, you want the best rate. That way you're paying the least amount of interest that you will the entire life of the loan. All right, guys, so that's going to do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.